All right, team. Good evening. Welcome aboard to GAR Capital's YouTube channel. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Glad to be with you this evening. Didn't do a video last week. I was out of the country. I flew to Colombia for a couple of days. I'm back at the home office, ready to rock and roll and talk about the markets. Today's recap is going to be focused a lot on options. We've had a pretty good run in June and July. This past week, not so much. And I really want to emphasize these kind of weeks because they happen the longer you trade. You're going to have some really, really great weeks and really, really great runs. Keep perspective that it doesn't last forever. Sometimes we do get that choppy condition where our trades go expired, worthless, very, very tough. But that's what I want to focus on, at least initially. And then we're going to go ahead and go over what's happening for the upcoming week, how we can position ourselves to bounce back from a tough week, this past one. We had OPEX this past Friday, and see what's cooking in terms of earnings. We got some earnings coming up. Put a couple of names on the watch list. I'll go over a handful, and then we'll go from there. So let's go ahead and get started right now. Futures pretty much flat. I guess just to start, what I want to see really quick before we get started on the weekend options. Bull flag on the 1 hour here. I put an alert at 40. If we get above maybe 63.50, we can go long. I don't expect a big move this week at all, actually. Other than earnings, it's been pretty quiet and a dry tape. VIX is pretty suppressed around 1641. The dollar is bouncing like I've been expecting, but now the idea is to kind of get ourselves positioned to take advantage of some action if there's any, and the place to do it is going to be with earnings, and that's what I'm going to focus on today. But let's talk about what didn't work this past week in terms of option signals. Let's go over each one. Okay, as you can see, this is the week. Tough all around. Amazon, Micron, Silver, Apple, and Walmart. Let's go over each one because this is very, very important. So in the future, when we learn, it is not going to cost us any money. And it did, because if anyone likes some loss porn, here you go. Micron, Silver, Tesla, this actually flipped. So I'm going to go over that too. Walmart, that's $1,000 down. Apple and Amazon, $2,000 on Amazon. Amazon, I sent first as a masterclass trade, and then I sent it to everyone else, so I got hit double. Not the best, obviously. These things happen in terms of options, so we move forward. But you see how Tesla was red, down 80%. It flipped over to green, and then we got out at 45%. So it's really never over in options. I know it may seem like it's over, but wow, what a comeback from Tesla. So at least there's some kind of positivity there. All right, let's start with Amazon. And here's the problem with Amazon. I still like it. I still think we go higher. I think we just ran out of time, to be quite honest, with the OPEX being where it is. I still like 230. That's really my target. The problem is, and what do we wait for? Do we wait for 228? Maybe that'll confirm. Maybe if we go ahead and wait for 227.50, or do we have to wait for earnings? So I think waiting for earnings is where Amazon finally breaks out. So let's keep Amazon on ice. The problem with Amazon is that it just chopped us up. You know, you're talking about 2 weeks. The move has been $5. It's not enough volatility for us to take advantage on calls. We were way too out of the money at 230. Even if we got to 225, our premiums would have been chopped up anyways. So it's unfortunate, but I still like Amazon for more upside. I think that earnings maybe it's next week on Amazon, maybe in 2 weeks. We'll see if we get an opportunity to play up to 230. And I do think it breaks. I still like Amazon this year. It's one of our top 10 of 2025. Just give it some time. It'll get there. Micron, we had the 130 calls. Here's where it really hurts. We had, I think, was it the 130s? I think we were in the money on those. More the 4 hour chart, total breakout, 137, broke out above 130, and then pulled back. Very, very difficult. And you could see not even a recovery. I still like Micron for more upside just for the fact on valuations, it's on the cheaper side. And it just got slowly melted down. So not enough follow through from the earnings side post on Micron. We did not fill that gap yet. I was expecting us to fill that gap, but we just never got it. So you could see now we're kind of that bull flag breaking down. More than likely, this is going to tag 102. 102 to 105. So Micron right now does not look the best. Let's go to the daily to take a look. Yeah, you know, bouncing right off the 50. Running at 110. Kind of use that as support if that breaks down. I'm not going to say I want to say revenge trade, but it'll be a setup for a short down to around 103 to 100. I think we'll get another crack at it. How's that? So Micron, a tough one, even post earnings, not enough juice to get us higher. Tough one. Silver is going to hurt because we were actually in the money. We had the 35 calls and it was pretty much playing out beautifully. I still like silver for more upside. Let's zoom this out a little bit. Total breakout, total flag breakout or triangle breakout, breakout of the highs from 2012. I mean, pretty good. The problem is that we just ran out of time and we actually had weeks. So I thought that maybe July OPEX would give us a little bit of juice. We were in the money at 35 and then it just kind of ran out of gas. Uh, just a tough one at the rodeo, gang. But I still like silver for more upside. We'd have to get above 35, at least that. And maybe wait for the highs to get another shot at SLV. Just a tough one. GLD and SLV have not been kind to me this year. GLD was a trade that I had for Masterclass, and it was the only trade I got wrong since May 15th. We'll go over that here in a second. But first, let's learn from everything. So we know with Amazon, we may just run out of time. Maybe we should have bought more time ahead of earnings. Fair enough. I just think that we just got chopped around. Micron completely just didn't have any momentum. Could I have taken it a little earlier? Possibly. I thought that flag would play out. It did not. I don't think we could have changed anything there. SLV, we got to 35.58 in the money, but that was pre-market, and in options you can't really do anything pre-market. So with that being said, we kind of were beholden. We were just too early, which is pretty much the same as being wrong. So we're going to get another shot at these names. I believe Micron, if it does break 110, we'll get a crack to short down to 105, 100. Amazon, if we can actually get ahead of earnings and target 230 again. Well, at least we'll know we'll have volume. And SLV now, I think if we get above 35, that'd be interesting. Get above 35.58, we could talk about it. Apple is a tough one. This one is the one I really wish we could have got back because when we got in, I got in on a wick and I got wicked out and got pulled back rather instantaneously. I got the worst price possible. And I just got chopped for it. Still above the 100-day. Nothing really changed other than the bleeding of my premiums. So a tough one. You have the 20-day above the 50-day. Some semblance of momentum there. The problem is that we're still below the 200. If you're someone that owns Apple stock, is there any concern here? They're not a growth company anymore. Unless we have some kind of breakout technology, the only thing I can sense Apple coming through from here is some major buyback. And I'm just hoping and praying that Berkshire Hathaway still keeps their Apple shares because there's a gap to fill at 220. Once we break above that gap at 220, we'll be above the 200-day at 222. That would probably give us the green light to go ahead and probably nibble on the stock a little bit, buy some shares. I would hope that valuations, which are a little expensive here, even here, maybe we get a wash down to 185, 190 in August and September. Completely possible ahead of an iPhone launch. Right now, I think with Apple, we're looking at how to price it. There just isn't the growth driver anymore, and they're behind on AI. So how do you price this? And I think the price discovery we've seen since March has been pretty benign. Other than the buy the dip level of around 175, maybe some short covering, it's been dead money since April. So keep in mind that Apple was down even before Liberation Day. So it has nothing really to do with tariffs other than the rumors of them. And then they had their exemptions. I think they had some exemptions on Apple. But for now, it's just sideways. So I think we kind of have to keep Apple on ice, even with earnings. Let Apple earn our business the way I see it. Let the price at least dictate to us what we do in the future instead of trying to predict it. Because right now, there isn't any prediction on Apple. So to me, it's neutral money. Leave it alone. Walmart got chopped around. It even got close to 100, but it's around 99.50. Just chopped us around, even with Prime Day and Walmart Day, whatever competitor name they call it for Amazon when they have their Prime Day in July. Just got chopped here. It just sucks that we didn't catch this one because we've traded Walmart before and been successful at it. But looking at this here, would I have changed anything? I guess a break of 100, we would have probably traded the 102s to fill the gap. That's the only thing I would have changed there on Walmart. Apple, I just didn't get the best price, and I guess I should have waited for the settlement of the daily candle in order to get in. But that's what happens. These things happen. We're going to get better for it. and get smarter for it. Let's look at Tesla. What a comeback. It's on my watch list this week. They report on Wednesday. So Tesla we caught that Friday, boy. This candle right here has saved us. Beautiful. Got out of 45%. This thing was dead in the water. We had the 320 calls and we were in the money, or the 325s. So well done to the team, or 330s, excuse me. We tagged in the money. We got the hell out. I still like Tesla for more moving forward. Take a look at the daily. You could see this downward trend line that we might be testing soon. So what are we looking for? 340? 340 couldn't confirm. I like it long in terms of the stock in moving forward ahead of earnings. I actually would be bullish on Tesla. Up to what, 360, 370? That's what we're looking for. 400 is still my main target. That is your gap to fill on the daily. The assumption to me is that some really great guidance, or maybe some stock buyback. I don't know what Tesla could say on the call, just based on price action. I think being long the stock ahead of earnings, I think it squeezes higher. That's just my personal opinion. Do I want to get ahead of it, ahead of earnings? That remains to be seen. I have to see the price, the stock of the price of the stock. Hello, to get above 340, and then see if we can maybe target the 360, 370 calls. But they might be very, very expensive. So tread carefully here. We could always wait for post earnings and then make our trade then, and use, if it breaks out, 350 as support. Could always do that and then kind of target that gap fill. But I expect Tesla to move higher personally, and that is on the watch list this week. Let's take a look at future signals. This past week, we were down 5 points. We were down 20 on July 16th. Then we got in on July 17th on a long 63.20. We caught 20 points. And then we ran out of time on Friday. We were trying to catch a little bit of a run up into the end of the day in terms of OPEX, minus 5 points. We're still up for the month. 60 ES points, 6 wins, 3 losses, 1 break even. Pretty choppy conditions. Wish I could get more. Looking to get some more this week. But that's where we are in terms of futures signals. Masterclass only trades, crushed it. Absolutely crushed it. The performance, 22 out of 23 trades since May 15th. That's 3 months. So congratulations. The article is right here on their Masterclass trade results. That's the one-on-one teaching that I do. I do put a little more in terms of trades that are on the riskier side. There are some names there that I would not probably talk about in public. For example, let's take a look at Open Door. Open Door is a name that I've seen a lot on Reddit. Let's take a look at it. This is a name that I probably would not trade. But yet QBTS was a penny stock, for example. That was a $4 stock. And then you had the mining company, for example. So as we get more money supply and rotation into more risk, you start seeing these names. Anyone remember 2021? These SPAC names? I think these names are not exactly investable in my opinion, but they are tradable and we could take advantage of it. So Open has been a short squeeze candidate. Obviously, there's a lot of buzz online regarding this name. I don't think it's worth even owning, but is it worth a shot in terms of trading it? I'm going to keep an eye on it. I hope it doesn't soar pre-market, but if it does, you're seeing just really this chart here on the daily, as there's probably more upside in terms of a short squeeze. I don't own a position on this, but hey, you never know, right? You never know. So 2.5, why not? We'll see if how the options volume is. But again, it's a name I've seen all over X, which is Twitter, and Reddit. So who knows? That's how Clove started. That's how Space started, and people take advantage. And why not? Why not? You traders watching on YouTube can take advantage. We will see on that stock. Let's take a look at this week's watch list and charts. And I got a couple here. You know what? I want to go over Netflix. Netflix I posted. Netflix reported earnings, and it was really good earnings, actually. But I think it's time to cool off on the name. We are below the 50-day. I don't think it's enough of a dip for anyone to jump in and buy until 1100. Right around here. So am I saying to short this immediately in terms of puts? If there's something out there around the 1100, 1050 area, maybe even 1000 with some time, why not? I think a bit of retesting of the breakout. And you could see that's where we rejected at first, pulled back, and then finally broke out. So a retest of that support, probably a good buy zone. Hopefully the PE multiples kind of cool off a bit. And then there you go. You can see a buy that dip opportunity. So Think about it, $1,200 to 1,000. That's a bear market on Netflix. Is that possible in August and September? Maybe. I would like that. Obviously, if you're looking long term, if you're looking for trading, an opportunity to short if we get a rotation out of mega caps is all. So that's something that I am keeping an eye on. American Airlines reports this week. You see a bear flag. And we traded American Airlines with our members a couple weeks ago and Delta Airlines with Masterclass. Actual head and shoulders possibly here. I'm actually thinking that this pulls back a little bit. So 1125, I'm expecting that American Airlines pulls back post earnings. So let's see if it breaks out. Hey, listen, it breaks above 1341. We can go ahead and see what the 15 calls or the 14 calls have. But my expectation is pulls back and gets us down to around $10 to $9 on American Airlines. Who knows what the guidance is? I have no idea, just based on the technicals here. ES, real quick, I want to kind of recap it. Let's go to the 30-minute chart, and you can see that bull flag setup. 63.40 is just my alert to just kind of wake me up. 63.50 would be my entry, and then as high as you want to go, as high as we can go, basically 6,400 or so. Cross my fingers if we get there. That's all we can do in this kind of momentum train. You could see it's just been back and forth in July. Look, since July 1st, ES has been stuck 62, 64, about 100-point range. Not exactly, tons of opportunity, but other than small scalping here and there, because you obviously want to confirm the trend, even though it's short term. So a scalper's paradise indeed, but pretty tough to navigate it as of right now. Opportunities will get better. Are we due for a pullback? Yes. Let's go ahead and pivot into that. This past week, I'm going to show you this. I read S&P 500 after being above its 20-day moving average for 59 days. This is the last instances that has happened. Last time was in 1998. 0.34% the next day. So usually the next day, on average, it's down a little bit. But it's only 44% of the time positive. How about the next day? Only 44% of the time positive. And the average dips a little bit. 3 days later, only 11% of the time stock market is green since we've had the 59 days. And then 4 days later, the at least better odds, 22%. A week later, we get a little better. And then 2 weeks later, 44%. So short term, not great. Again, kind of expecting that pullback, a little bit of a consolidation phase minimum. I think we're going to kind of run out of buyers here. And then 3 months later, at least the skies open up. 100% of the time we're green 3 months later. So that gets us to August, September, October. So by October 17th, we'll be green from this price today. Somehow, some way. 100% of the time. 6 months later, 89% of the time. Still great odds. 9 months later, okay, drops a little bit. And you can see the averages kind of dip. But then 1 year later, 9% gain. And the S&P 500, 78% of the time. The average max gain is 15%, with the average max loss being 9%. That was in 1965 and 1987. Granted, 1987 was Black Monday, the crash of 87 in October. So something to look at, obviously, in terms of forward expectations. And then saw this chart yesterday too. This is 2025 versus 2008 being in blue. And I wrote a pretty breakdown on expectations. This is very unlikely. Is it scary? Yeah. And here's the problem is that obviously I expect August and September to be weaker seasonally. So we're going to see a pullback, and this is going to give us more credence that this is how it looks like. It's two different markets back then, 2008 and now. The mortgage market is extremely regulated. Unless that becomes deregulated, that could happen. I would assume that wouldn't be that quick. But with that being said, mortgage-backed securities, I don't think that would be the reason if we're to follow this analog for a pullback. We just had a pullback. We just had a horrible one in April. Very rare do you have a double dip. That's my point. So maybe, some little bit of, fear out there possibly. Yeah, when everyone's greedy, I get it. Sure, makes a lot of sense. But it's very unlikely that happens. So that's where we are for the week. Let's take a look rather quickly on the macro. Again, earnings calendar. Put some earnings expectations up on our watch list and charts. And We also have here this week's economic data. Fed Chair Powell speaks on Tuesday at 8:30 in the morning. Existing home sales on Wednesday. Unemployment claims is every week. PMIs, uh, manufacturing and services. That's the Purchasing Manager Index. It's a survey. New home sales on Thursday and durable goods orders on Friday. So again, rather quiet again in terms of the economic front. And right now, buybacks are in a blackout period ahead of earnings. So once they report earnings, these big companies, they report their buybacks. That's when the machines, so to speak, turn on. But for right now, I do expect a little sideways action, quiet. That's why I'm kind of focused on who's reporting and who's not reporting. So the names that I have on the watches and charts here, Netflix already reported, but Google, for example, I'm expecting this to break out. I'm looking for a level around 200 to 203. That's a gap to fill there. And then Tesla, again, I just spoke about that earlier. Let's see if we can get above 350. It's a name that we traded last week. Chipotle reports too. You can see a setup where we could go higher, we could go lower. I expect Chipotle to move higher if it gets above 58. We'll see what the volume looks like. And then Intel has just been kind of dead money sideways. If it breaks above 26, 28 is the gap fill. Let's see if we get it. And then IBM, be careful with this one. Upward wedge. This breaks down below 270 or 275. There is a problem with IBM and maybe a little bit of retesting of some pricing. Let's see what we get. Full week this week. Last week was pretty tough, but we'll do our best to make it back. Seeing that S&P is moving up a little bit, see if we get an opportunity ahead of Tokyo. Have a great rest of your evening. I will see you guys in the server tomorrow for our morning market brief that I do every morning at 8:45 Eastern. While I answer all your questions. Have a great rest of your Sunday. I'll see you then. Cheers all.